Here we go. Let me record this real quick. Perfect. Okay. Let's get started. One of the things I wanted to talk about, I definitely wanted to start doing some mindset stuff as we get into this, right? And here, you know what? Let me bear with me. Let me close this out. We'll do a new share. Let's do it like this. Bear with me here. I'm just opening everything up right now. Close. All right, cool. We'll close that out. Perfect. All right. Can you guys hear me? Is my mic is going? So we're good, right? Everyone can hear me? No? Can nobody hear me? Ah, perfect. All right. There we go. All right. So I wanted to start with some mindset stuff, right? I went for a pretty good bike ride today, and I was listening to actually I was listening to I guess you would call it a like an interview with Mark Douglas, and he was on a I don't know, it was probably back in the 90s. He was on a traders like talk show, I guess you could call it. And I made a mention, or I did some Siri voice notes to just remind me of what he was talking about. And I definitely understood what I guess the premise of what he was trying to get at. And I want to pass this on, right? Because I know a lot of people that I've spoken to struggle in certain aspects of trading, right? You know, if you definitely jump on the Go Live sessions, if you speak to a lot of these traders that have been doing it for a couple of years, the biggest thing that they talk about is the mindset, right? And obviously it's one of the things that I definitely feel is probably the most important part of trading. Anyway, what Mark Douglas was talking about, right? And the example he used is trading is all a game of probability, right? It has nothing to do with wins and losses. And just hear me out on this, right? So it's all probability. It's all a game of statistics. So if I were to show you my June journal, right, for my Forex account, it would show that I was 68% accurate, right? 68% accurate in my June trades, okay? In theory, that's actually kind of crappy, right? 68%. But even if I was doing a 1-to-1 ROI, right, 1-to-1 risk for one return, I'd still be profitable, right? I'm over 50%. And most of you know that most of my trades aren't 1-to-1. Okay, so 68%, I was still pretty profitable. But what he used, the analogy that he used was this, and I really want, especially for people that are struggling with this, I want you to just try to understand the analogy. He used a coin flip, right? Heads and tails on a quarter. But what he did was he implemented some sort of outside influence to that quarter, right? And what he did was he said, there's a weight on the head side that would force it to be 70% accurate, or 70% of the time it would land on heads, right? So if you knew that 70% of the time that quarter is going to land on heads, but you don't know the sequence that it's going to land on, right? What are you going to do? Well, you're going to bet every time the same amount, right? And you're going to bet heads because you're going to win 70% of those times, and you'd rather win 70% than lose 30%. Either way, you're going to lose it, but you're willing to give up that 30% risk in order to catch the 70% return on that quarter flip. Trading is the same way, right? Many of you know, like when I talk about a setup, if the setup meets my confirmations, I take it, all right? Because I know my strategy that I use, right, is accurate, right? I'm based on my journal, based on the confidence I have, based on the back testing I've done, I know that, hey, I might lose 7 trades, right? But the next 4 or 5 trades, I might win all of them, and the ROI on them is going to be tremendous to where I'm going to make a huge percentage off of it. So you have to think about it. You might not know the order in which those trades are going to win, right? Because nothing is 100%, and I understand that, right? I accept that risk. A lot of times I hear, I'll talk to some traders, especially newer traders, that will say, I'm going to get into this trade, and the minute it goes into profit, they want to go to break even, right? And, that's up to you. I can tell you from my point of view, I'm not going to break even until it meets some confirmations for me, because I've already assumed the risk, right? A perfect example would be the US dollar Swiss franc trade I sent out today, right? I think I sent it out during the London session last night. But I assumed the risk, right? Whether it was $4, $40, $400, $4,000, right? I assumed the risk on that trade. And then when I woke up this morning and I saw that it was up, almost 5 to 1, I was happy about it, right? I could have moved my stop loss, which I didn't, because if I would have moved my stop loss last night during London when it was about 15 pips of profit, I would have been stopped out at break even. Okay, but I understood where price needed to go. I understood there might be a little manipulation, so I let it ride. But I say that just to give you the understanding that you might not win every trade, right? There's no strategy is 100%. And a lot of people get discouraged, because I know I was there when I was in the beginning, right? I got discouraged, man, the strategy doesn't work, right? I've lost 4 trades. Don't give up just because you've lost 4 trades, all right? Because you don't know in a 20 trade sequence, you don't know if the first 4 trades where you're only 4 trades you're going to lose, and then the next 16 are all going to be winners, right? You have to, and that's why trading this skill is extremely important, to understand what you're trying to accomplish, right? You have to put in what you put in is what you're going to get in return. So if you back test, if you spend your time charting, if you understand the actual strategies that you're trading, right? Whether it's smart money concepts like what I trade, whether it's any of the other platforms, whether it's break and retest, whether it's doing a DeLorean, right? You have to understand that if I were to tell you based on my back testing that this strategy is 70% accurate, right? You're going to take some losses, right? I take losses all the time. You have to understand that you are going to take those losses. Now, how do you manage those losses to be, where you're still making money? And I actually wrote this down, right? I wrote this down because I had to stop, get off my bike, and wrote it down, because this was the key to Mark Douglas's psychology secret to success, right? And just hear me out, right? This is the key. And if you don't understand this, then maybe you're in the, maybe trading isn't for you. But the key to success is to win more money than you lose, right? So a lot of times, and I see it all the time on when people are posting in some of these other telegrams I'm in, they'll be posting, that, they just made, whatever XYZ amount of money, right, on a trade. And that's great that you're making XYZ, money on that trade. But you also have to be practicing proper risk management, right? When I lose small, right? 1%. Listen, 1% is nothing. Whether you're trading a $100 account or a $10,000 account or a $100,000 account, 1% in the grand scheme of your equity account is nothing, right? 2% is nothing, right? So if you manage your risk, you're going to follow Mark Douglas's secret to success, right? You're going to make more money than you lose. All right. And that's where, I love that phrase, just trust the process. You have to trust the process, right? You have to understand that those losses are going to come. And, I know there's some people on the call that I've spoken to privately, and my biggest thing is, the ROI is probably my biggest hump that I have to, get over, right? It's, you have to find that balance where you need to protect your trade, right? Because you're in profit, protect the trade, but yet still give it room to move, right? Because if it runs and goes to your TP, whether that's a 3 to 1, a 5 to 1, a 12 to 1, a 32 to 1, right? That's where you're making your money, right? The 1% losses, the 2% losses, obviously that's just your risk, right? That's what you're willing to put up, all right? and you need to be willing to put that up, right? You need to be willing to give it up. For me, the minute I put an order in or execute a trade, I've already counted that as a loss, right? A good example, and I'll go over it tonight, was a USD Canadian that I took this morning. I thought about closing it out in profit because I was like, I don't like the price action that I'm seeing. But instead, all I did was just minimize the risk. So I moved my stop loss a little further down. Instead of a 1% risk, I did a 0.5% risk. And then ultimately it got me some pips out of it, right? So, I definitely hope that, you get an understanding of what I'm talking about, right? Understanding that, you can't be afraid to lose, right? Because winning and losing mean nothing in trading, right? A lot of times you'll hear people talk about egos, right? And I know a lot of people on here have heard me say that I dare the market to stop me out, because 9 times out of 10 my bias is correct, but I might just have the wrong entry, right? I might be a little early or a little late to it. So in my eyes, if the market wants to stop me out, because guess what? I'm going to get you on the next one. And you have to have that mentality. Don't worry about the wins and losses. Who cares about it, right? If it wasn't for the algorithm in my Excel spreadsheet for my journal, I wouldn't even know what my win percentage was. The only percentage I care about is my profit margin, all right? And that's really the only thing you need to worry about. Don't worry about winning 60, 80, 90% of your trades. Be more worried about, well, what is the percentage growth that you've made this week with proper risk management, okay? Because I'll see people, whether it's on a demo account or a live account, I don't know, I don't care, right? But I'll see people that are throwing, a 0.08 lot on a Forex trade, right? On a Euro GBP, 0.08, and then they'll do a 0.08 on US 30, which is not the same, and of course on US 30, they'll make $400 or $500 on that. And on Euro GBP, they'll make $5. But really, you're doing a disservice to yourself because you're not practicing proper risk management, right? There's a lot of people that have come and gone in this group. And I'll tell you right now, if you were to do like an exit survey on why they quit trading, it's because they blew their accounts, right? And it's not because they blew their accounts because they were risking 2% and they lost 50 straight trades, right? Or they did 1% and they lost 100 straight trades, right? Think about it. If you're doing 1% risk, you have to lose 100 straight trades to blow your account, right? So that's my soapbox on risk management. That is my little tidbits on some mindset and understanding. Don't be afraid to lose. I've said it from the beginning. Don't have any emotion in this, right? When I win, I win. If I lose, I lose. I could care less, right? For me, it's just another transaction that occurred. All right. So let's get into it. I wanted to start off with getting into something a little crazy here, right? Let me share the screen. Let me throw it up here. Let's go to desktop 3. All right. So has everyone seen what's been going on with gold, right? Has anyone traded gold? Has anyone seen anything? I'm all the way up there now. Let's do this here. Cool. All right. So obviously gold has hit all-time highs, right? Everyone should be on that, right? Does everyone have an idea or understanding of why gold has started to make such a huge move? And if you follow me on Facebook, I posted something tonight on it. Let's go to commodities. All right. So real quick, I don't want to get too crazy down the rabbit hole, but this is gold, right? This is gold. Let's just go to the 4-hour chart, right? So this is gold, all right? I just want to compare. All right, so this is the 10-year Treasury note, right? 10-year Treasury note. And this is something that I use as an asset, right? All right, so we got, let's see. All right, so gold. All right, so DXY is falling. That's why gold is going up. Okay, kind of, right? The U.S. economy, people are buying gold instead. Yes, right. So there is a flood to safe haven, right? There is a flood to safety net. But here's the one thing I want you guys to start looking at, right? So this is the 10-year Treasury note. And this is kind of a catalyst or a benchmark, right, for gold. Right. So if we were going to compare this, and I was going to reach out and talk to someone like Zach on the Trade House to kind of give them, you know, some insight, because I've definitely been jumping down some of this rabbit hole stuff, right? So if we look, right, if we look at the 10-year Treasury note, and let me get in here, let's look at it, right? Okay, so let's just compare it, right? You can see the dip, right? The dip here, and then we kind of just went sideways on the Treasury note where gold is just taking off, right? Gold is taking off, all right? And then when we look at the DXY, we obviously the DXY falling down, all right? And I'll tell you right now what it has to do with, all right? If you Google Judy Sheldon, right? Google her and just read some of the top stories. You know what? Let's look, right? So senators are opposing Shelton's federal candidacy. And just so you guys have an understanding, President Trump has nominated Judy Shelton to be on the Federal Reserve Board. All right. If you guys don't understand the power of the Federal Reserve, definitely start looking into it. The Federal Reserve is not a U.S. government agency, right? It has nothing to do with the U.S. government. It's essentially one of the world banks, right? It's an institution that prints and lends money, all right? So when you look and you read some of these things, just go ahead and read, all right? There's so many, the media is essentially just throwing her down, saying that she shouldn't be put on the board. And when I start to see that multiple media outlets are doing that, right, and mainstream media in the U.S. and around the world is all owned by, you know, certain families, right? We know the agenda and the misinformation, right? But when you start to look at all these headlines, right? You know, will Trump's Judy Sheldon Fed nomination disrupt or fuel the gold price, right? Well, I had every anticipation that it was going to fuel it, right? When you start looking at, where's one of the other ones I was looking at, man? It was, you know, all these senators are going to vote against her nomination, right? There was one in the New York Times. God help us if Judy Shelton joins the Fed, from the New York Times, right? So they're calling her an unqualified and dangerous nominee that must be rejected. All right. So when you actually get into it and start looking at what she is looking to do, right? This is the New York Times. It was hilarious. I read this. Essentially the Senate committee cleared her for it. Now she just needs a certain amount of votes to get on the board, right? What's up, man? How's it going? But when you look at, and you can just read this from the American Institute of Economic Research, right? I'm just going to highlight this right here, all right? I mean, I've done some research on her. You know, she's pretty good on her stances, right? But this is the key thing that I was looking at, right? Is she knows that the gold standards and the gold price rules when not politically manipulated, right? She is all about currency manipulation and how to stop currency manipulation, okay? She explains that to depoliticize and bar from manipulating money, credit, interest rates, and business cycles, okay? The golden price rule. So essentially, she wants to put the US dollar back on the gold standard, which is a big thing that President Trump has wanted to do, okay? You can read this article. I mean, I'll post it in here, but I just found it fascinating that, and this is only recent. This is probably in the last 3 weeks, 4 weeks, that this has really started to fuel, right? But it's ultimately taking the power away from these world banks that are essentially manipulating currencies, okay? Wouldn't that encourage U.S. fiscal responsibility? Well, I mean, what do you mean by encourage fiscal responsibility? I don't know what you mean by that, Dave. I mean, there's all kinds of, essentially, it's going to take us off fiat currency, right? And it's going to put us on a gold standard. Right, absolutely. But it's not U.S. fiscal. Listen, the United States doesn't print money, just so you know, right? The Federal Reserve does. So think about it. Our currency has been being manipulated by a bank, right? So let me ask you this: whose power are we going to take away if we go onto a gold standard and take away the power to print money, to manipulate currency, right? Exactly, the banks. Who owns the banks? No, not the politicians. I mean, politicians get the cutbacks, right? But exactly, the Federal Reserve. Just Google who owns the Federal Reserve and how the Federal Reserve was created, all right? If you've watched a couple of the movies online, you might start to understand the transfer of wealth that is being put in place, all right? So, enough of that, just research it. I just wanted to touch on it because I thought it was fascinating, especially, and the reason that we're seeing gold, right? The reason that we're seeing gold just tear up, right? Just tear up right now, especially with silver, is because all the metals, right? So when you see a manipulation of this magnitude to all-time highs, exactly, rabbit hole. When you see a manipulation of all-time highs like this is people not wanting to miss the boat in case we do get on a gold standard, because I'll tell you right now, the price of gold will skyrocket. Okay, it will skyrocket because now the greenback, which is essentially the most powerful currency in the world, is going to be backed by gold, by a gold bar, right? We can put an actual tangible, equivalent attached to that greenback. And essentially, no more manipulation, no more let's just print money when we want. So I think it's fascinating, and I we'll see what happens. But Googler, Judy Shelton, I like I said, I thought it was just fascinating, the articles. All right, so let's get into it. Let's take a look, right? One of the things I wanted to touch over, I sent out U.S. dollar Swiss franc last night, right? And when we're looking at a larger time frame, right? You can see I did a call last night for Matt Sotero, and I kind of went over this, and I looked at the setup. It looked pretty nice. We had equal lows down here that we've kind of just taken, right? We've taken this low here, and ultimately, I do want to see us get into something in here, right? The reason my take profit on U.S. dollar Swiss franc was just so small is because I really don't have much data, right? So this is the setup I sent out. It was off the 30-minute open, right? So it was off this candle right here, okay? This 30-minute candle. And when we go back to what I was looking at, this is kind of what I saw, right? This is exactly what I saw. We had equal lows down here that I knew we were going to get targeted because I'm still bearish on the dollar, right? And ultimately, I wanted to see us trade into this candle right here. Trade into it and then target these lows. You can see it was a nice 5-to-1 ROI. Great way to start the week. Ultimately, it was during London session that it activated, I think. Let's see. All right, there we go. We activated. So this was at 11. Oh, I was in bed anyway, but 11:30 at night, it activated. And this is what I was talking about as far as letting trades ride, right? So this was only a 10 pip stop loss. We really didn't need much more than that. You can see we're at 7 pips right there. Let me close this out there. All right. So you can see at one point, this did go into profit, 19 pips, right? Into this candle right here with 19 pips. Some people would have moved to break even, and ultimately what would have happened is you would have got stopped out. Is that the chart you sent me the other day? Dude, honestly, man, I don't know. It might have been. I'd have to look. But this printed Sunday, right? We traded into here. So this was Sunday. Sunday's low right here, and then Monday morning. Not Monday morning. Yeah, Monday morning we came into here. So I don't know if there was a name that you were looking at. But I just saw the equal lows. I saw the nice pullback here. which grabbed some liquidity that was up in here, you know, and ultimately, you know, I wanted just to target these lows. And we did that, right? We crashed right through it. We pulled up. I was potentially looking to take another entry from here. I just didn't send it out. I'm not actually looking to take it because I don't have any targets, right? I don't want to rely on I'm not going to rely on something that happened back in 2014 without really any more data, okay? Oh, it's when I was at volleyball? I got you, man, I got you. Okay. So, but that was US dollar Swiss franc. It was a nice opening to the week. You know, it turned out pretty nice. And you know, I definitely would suggest, you know, especially if you're new to this, jumping in and taking a look at it, right? You know, the price action, obviously I wasn't awake for any of this. You know, I just let it ride. I was willing to risk that 10 pips on 1% just to take it down and target these lows. You know, but again, we had equal highs. I knew that liquidity was going to get run. You know, a lot of sellers were thinking resistance, resistance, resistance. We're taking it down. It gave that nice, you know, pullback to grab some of this liquidity, and then we shot down. All right. So that was US dollar Swiss franc. The other one that I took was US dollar Canadian. Where's US dollar Canadian? There it is. Okay. So I took this US dollar Canadian, and this was actually, I want to say Bounce Back gave it out this morning as well. You know what, let me, and this is what I want to do, right? Let me go back to here because I talked about it last night on Matt's call. Let's see. Let's go back to right here. Okay. So this is just something I want to touch base with, right? Because I know a lot of people also struggle with this. So last week, I think it was Thursday, I called out a buy, and the buy was off of, actually, it's still here. I was waiting since like beginning of June off of this price point, right? Had 50% of this candle in here that we ended up getting a reaction off of, right? So we bought this up, didn't go as far as I wanted it to go, but no biggie, right? So when price came back to return into this candle, right, this is what I was looking at, all right? And I want to give you guys an insight into what I was thinking and what I was looking at. So we have liquidity here, right, equal lows. So this is that FU candle that grabs liquidity, right? I don't need to put a line chart, but, right, we broke 1 hour structure. Where is it? There it is, okay. We broke 1 hour structure, right? You could see this high was broken here, right? So we broke 1 hour structure. So I was 100% willing to take an entry like this, right? 11 pip stop loss. And my targets would have been these equal highs right up here, right? Nice little almost 7-to-1 ROI. So I was 100% willing to take this off that 50%, okay? Now, time of day is everything for me, right? So we can see that price kind of just meanders around, right? And it's already kind of giving me the idea of what I want to see, right? Because we have, and I can move this up a little higher, right? We have an area of liquidity, right? An area of liquidity here where orders found some equal highs, so we have selling pressure that's coming in here, right? Price is failing to break above it, which tells me that there's liquidity, there's orders up there, right? So at this point, what I am personally looking for is just, I had a buy limit set, right? I had a buy limit set willing to give this all it's got, okay? Let me see. All right, so finally, what time was this at? This was at 1 p.m., right? So if we go back, right, if we go back to New York Open, right, and this is where understanding your pairs, right, and when they want to move. So US dollar Canadian, I typically would have wanted to see a nice move on this during the New York Open, right, that 8 to 9 Eastern time candle. All right, so here's the 8 a.m., here's 9, here's 10, here's 11, here's 12. So what do we look for when we're taking a mitigation off of a candle? If someone can throw this in the chat, what are we looking for as a reaction for price to essentially come in and mitigate out, Are we, you know, what is something that, or what are the signs that we're looking for that we're in the right direction? Price action, but what do we mean, right? What do we mean? Specifically, so in this instance right here, specifically, what would I have wanted, you know, during New York session? Not capture liquidity, right? Because capturing liquidity would have been my target, right? That would have been my target to take it up here, okay? Not creating equal highs. All right, so I'll give it to you right here. Let me show you, okay? So this is, and I just I'm gonna highlight New York session, right? Price entering the buy and then move. Perfect. There you go, Camilla. That's exactly what I wanted to hear. Exactly. So price entering the buy and then immediately showing a reaction, right? Because think about it. What did this candle here capture liquidity, right? So we would say that this is the sell to buy candle. So if price is going to come back and mitigate out, it's to mitigate out of the sell and then we're going up, right? But the fact that during New York session, right, when this pair is trading at full steam, right, during Asian and London, the US dollar Canadian, they're not trading at full steam. During New York Open, right, so we sat here for 1, 2, 3, 4, 5. It took 6 hours for it to finally come into my buy zone, all right? Now, had it come into the 1 hour, right? Now, you can argue it's subjective if this was a mitigation out of that, right? But we would say at 11 o'clock, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So 14 straight hours, right? We sat here on this 1 hour open, okay? And we didn't move away. Now, if this would have just moved away, I would have canceled the order. It would have been what it is, right? You know, I was just trying to get greedy. You know, I was looking for those Kmart blue light special pricing, okay? But for 14 hours, we literally tagged the open of the 1 hour, tagged it again, and we just didn't move away. So when it came time, right, when I had my alert set and it finally came time, when price came to my 50%, I didn't enter this at all, right? What I wanted to see, let me turn on my back massager. There we go. I wanted to see a break of structure. So what I did is I came down to the 5 minute, right? I came down to the 5 minute, which is right here on this 50%. And I simply wanted to see a 5 minute break of structure and I would take the entry, right? So I came here to the line chart and I wanted to see price break the previous 5 minute structure. If price breaks that 5 minute structure, right? Breaks that 5 minute structure, it's just not going to run away. I would look for maybe an area of imbalance or a candle to get that mitigation, and then we go up, right? It would even give me a tighter stop loss, right? That's what I was looking for in this instance, and it was simply because we didn't react the way I wanted to react when we first came into the open, okay? So again, I wanted to see that 5 minute break of structure, all right? Now, what we ended up getting, again, you can see we're just sitting here. We're like meandering on this 50%, all right? And then ultimately, we're going to tank. And I think at that point, let me go to the 15. Yeah, at that point, it would have hit my stop loss, right? So you can see it never broke that area of focus that I wanted to see a structure break, right? So this here told me not to take the trade, all right? And that's why I didn't take it. Now, I'll tell you right now, if this was a higher probability trade and I was, you know, 100% set on taking this, I would have just put the buy limit in and taken the 1% loss, no big deal, right? But the fact that when I got here, you know, when I woke up in the morning and noticed that all of Asian, all of London, we just sat here and we tore into this 1 hour candle and did nothing from it, told me that, all right, so, you know, I need a structure break, right? I need to see that price is willing to go higher, and then I'll just take a mitigation off of it, okay? So ultimately, I didn't take the sell off of it for that reason, all right? And then fast forward to this morning, right? Fast forward to this morning, what do we get, right? We finally get a, here's these equal highs, right? We finally get a break on the 1 hour, right? You can see the structure break on the 1 hour up here, right? We captured all the liquidity, all right, from these areas up here. So that tells me, right? That tells me that we've captured liquidity. We're ready to go down, all right? We're ready to go down. So in this case, what I did was I took 50% off this H1 candle right here, because this candle is the candle that grabbed the liquidity from here, right? It also mitigated this imbalance that was sitting right in here, right? Mitigated that imbalance, okay? So what I personally was looking for was a break of structure, which we did, right? We broke structure when we came down here. This was the pullback. My entry, I had two entries, right? I had an entry off the 50%, okay? And then I also had an entry off of a fib, right? And if you look at the 5 minute, right? I don't need to do a line chart. You can see when we took this low right here, right? When this happened, this low was taken. That gave me everything I needed to know that we were going to go down. And then all I simply did was take it off the 88.6, right? When I put a fib on this sucker, all right, when I put a fib on it, you can see the 88.6 is lined up right here. And on the 5 minute, right, on the 5 minute, you can see, and I'll do a white line so it's easier to see. You can see that the 5 minute institutional candle lines up with the 88.6. So for me, this was a five, with UCAT, I had like a 1 pip spread. So this was like a 7 pip stop loss. All right. So I just split the orders. I did 0.5% on here and 0.5% on here. And then my targets, my first targets that I was looking at, right? Granted, I wanted to take it lower, but this was ideally my first targets. It was on the 1 hour. It was just this imbalance right here. All right. This imbalance right here was the key area I was looking at. And off of the reason I wanted to take it lower, but one of the reasons I wanted to take the imbalance is because it lined up with the negative 27, which is a fib sequence, right? And, just taking it to that right there, that was a 9, almost a 10 to 1. And this was a 3.5 to 1. All right. So what I ended up doing was I closed out half of these positions, right? I closed out half of these positions right here. And then I'm just going to let the rest positions ride. All right. Because I am looking to take this low and then look for another pullback. All right. So both of these positions are at break even. Actually, this one here is at break even off of this. So they're both in profit. And I closed out half of the position. So, I ended up walking away. I think it was like 7% is what I've cashed out on already. But, hopefully that gives you a little bit of insight of what I was looking at and what I saw, how I traded it. The smaller time frame entry, this entry up here, I took off the 86 was just a simple, we broke structure on the 5 minute, right? We took this low. And when I put a fib on it, and then I see this candle sitting right there that lines up with the 88.6, it's a no-brainer. I'm gonna take it every day, right? If I can get in now, if it didn't fill me, it didn't fill me. But if it comes back in here, and I'll tell you, this candle right here, I was throwing my mouse because I came within I think it was a half of a pip from entry, and then it drops like 15 pips. So I was getting a little irritated with the market right around, I think it was right before 10 a.m. And then finally I got the alert that it got activated, So, but that's what I saw here. That's what I was looking at. And you know what? I forgot to look at. I know we got some odd news tonight. Just bear with me 1 second. Let me see if it was at 9:30. Okay, yeah. So real quick, and I know I normally start with this, but it's not a huge week for news. I'm not really anticipating a lot of movement from CPI data. It's going to be negative, right? They're already forecasting negative. I'm not looking for a lot of movement on the Australian. I might look for a quick little reaction, and I've got a couple setups that I'm looking on it. home sales, I think home sales are going to be a big hit. From what I've been reading, like last 2 weeks, everything is pretty up on home sales. And then, of course, we have FOMC, which I'm anticipating the rate to stay the same. We're not moving on it. The press conference is what's really going to move the market when Jerome Powell starts talking. And that's pretty much it. I mean, you can see GDP, they're looking at a negative 34%. So we may get some strength in the dollar towards the end of the week, which will give us some more selling opportunities on crosses going into next week, right? But overall, I don't see a lot of movement going on this thing. Yep, the housing market's on fire. Yeah. Now, I don't know how much that's going to move the market. Especially right now, I don't know how much that's going to move the market. It may give us a pullback. It actually may give us an entry on Euro USD. We'll see. But anyway, so that's US dollar. That's what I was looking at for US dollar Canadian. So let's take a look at what I'm looking at for tonight. Let's go to order. Let's see. All right, so AJ. So this is what I've got for AJ, right? Walk you through my thought process here, right? So I am actually looking, and if we look at the bigger picture, right? Let's bring this down here. We got some perfect equal highs up here, right? Beautiful equal highs. Everyone would be looking at this M pattern that, it's coming down, it's coming down. It very well may, but I'm looking to at least buy this sucker up. And what I'm looking at is off of this 15-minute candle, right? The catalyst is there, right? You could see that we dropped off, right? We back here on the 5-minute time frame, we had equal lows. We had that FU candle that grabbed liquidity, and then immediately you see buying pressure in the market, right? Immediately. Bear with me here. There we go. Perfect. Immediately we see buying pressure in the market. And, what I ultimately like in this is that we left that point of interest, right? So we broke 15-minute structure, we took off, and now what have we done? We have literally ranged and created liquidity. 1, 2, 3, 4. So everyone is thinking this is great support, right? Buyers are in the market. So at this point, what I am looking for is I'm looking for that beautiful FU candle to shoot down, potentially during Australian news, right? Shoot down, take out liquidity, close out this sell, right? And then we start targeting up. All right. Now, my first targets are going to be this imbalance on the 1 hour, right? This 1 hour imbalance, this candle right here, and this inefficiency. That's going to be my first target. And I ultimately would like to see how we react off of this area right here, this last up candle, right? I think it's off the 4 hour. Yeah.
Mike,
so, yeah, go ahead.
can I ask a question about this?
Yeah.
You see how on the 15-minute it broke, any time frame it broke structure right there? Let me see, like at around 2,300.
2,300. Right, yeah, right in here. Okay.
Yeah, so that broke the previous structure, right?
What do you mean it broke the previous structure?
To the left. So the 15-minute, like that, it went ahead, so it went on top, so that breaks structure, right?
Sure. Yeah.
So my question is, like, I understand when you're talking about the equal lows. Technically speaking, usually don't you take an entry in that zone instead of letting it go below, because then it breaks structure again to the downside?
Well, let's look. Let's see what the 4 hour structure looks like.
Yeah. Okay. I didn't look at that, yeah.
So 4 hour structure. Let's see. Well, I think we're just consolidating on the 4 hour.
Yeah.
I really don't see anything there. Let's see the 1 hour. So here's our low, here's our high, our low, our high, and we're just consolidating. So I'll tell you right now, if we get a nice drop, right? Yeah, if we get a nice drop right here and then go up, I'm willing to take it.
as long as the candle doesn't close, right? If we get a reaction like this right here, a drop and then a takeoff, right? You can see, I mean, structure wise, I'd be okay with it. Because in the bigger scheme of it, right? If you look at the daily, on the daily, we're bullish, you know,
Yeah.
on all the higher time frames, we're bullish, you know. So like I wouldn't be too concerned with violating a 15-minute break of structure when we're immensely bullish on the larger time frames, right? Just remember, like the bigger time frame takes precedent. So, you know, for me, and I know what you mean. You know, I know exactly what you're saying. You know, anybody that was, and just think of it this way, right? So, what is everybody doing, right? Everyone here is buying, right? What is everybody that is trading off of a fib, right? So everyone's like, okay, we broke structure. So let's go from high to low, right? High to low. Oh, here we go. 71% retracement. We're going to take it up. And then they go from this low, right, to this high. And what happened? Look at that. We made, you know, what, well, it's like triple bottoms, right? Triple bottoms. All right. So anyone that's trying to trade it off a fib sequence is, you know, in my opinion, I'm willing to take this trade because they're going to get slammed. You're going to take every buyer out of the market, you know, and you're going to entice sellers because what's every seller going to do? Oh, look at that. We just broke 15 or 1 hour structure. So we're going down, let it break. We'll take a retest and we'll take it down. You know, if anyone is trying to say, you know, like, oh, here's a zone, right? We got a zone here. You know, wait for this break and a retest to take it down. They're going to get slammed, you know? So that's just my bias for it is that I'm bullish on it. You know, again, I'm bullish on indices as well. You know, I expect a little more downward momentum on the indices, but you know, any Japanese yen cross when the indices are going up, the yen is going to weaken, so this is going to go up. So I'm expecting, you know, a little more bullishness on the indices because they're overall bullish.
Thanks.
Yeah, does that make sense, Mike?
Yeah, yeah.
I mean, I know what you're talking about. I mean, I just this here looks like the perfect trap. You know what I mean? You know, it's just a perfect. Now, you know, if it doesn't come down here, it doesn't come down here. You know, but this is the only spot I'm looking to buy. I'm not looking to buy. You know, someone sent me a chart where they were looking to buy off of this candle here. I'm personally not looking to buy off of that. You know, just
Oh
because.
yeah, I agree with your assessment.
Yeah.
I was just curious because and now that you mentioned that that's probably what happened. There was a couple trades that I took last week that it was like, I guess if you want to call it the second leg of the Elliott wave, which is the 1, 2, 3, whatever, and which has a higher probability. But what happened was I just realized that I was going against the trend and it stopped me out. So now that you mentioned it, it made sense why that happened. You know.
Right.
Yeah. Thanks.
Yeah. No, Pete, I'm not selling this, man. No. I'm waiting for a buy. Here's my, you know, and it's an awesome ROI. I mean, it's a 10 pip stop. So, you know, AJ, I know on my broker, AJ's pretty small. It's only like a pip and a half, something like that. So, and this will be my first targets right up here. That's my first targets. And then just watch what happens in here, right? Watch what happens in here. But ultimately, you know, I'm looking at making new highs, right? That's what I'm ultimately looking at. All right. So I sent the chart. Let me, I'm also going to send it in the Telegram group. Hold on. Before I forget, because I always forget to throw them in there. Man, where the heck did it go? Oh, there it is. Bam, got it. Okay. So I threw that in the group. All right. The next one I'm looking at is GJ, right? I'm looking at GJ. And again, looking at the bigger time frame, right? We are bullish, right? Low are, you know, I mean, technically, if you look at the bigger time frame, we are bearish on the weekly and the monthly. But I'm just going daily, right? Daily, we have made, you know, a higher high and higher lows, right? So we've been respecting structure on the daily time frame. What I'm personally looking at is we got some equal highs are sitting right up here. We have this 4-hour candle that is a really nice point of interest for me, right? I'm looking at taking 50% of that candle. The reason I'm not going to take the full or the open of that candle is because the stop loss will just be way too much, right? At 50%, that gives me a 25 pip stop. That is a little or a little more than I like to take, but it is what it is, and ultimately my target's right up here, Now I don't know what's going to happen, because we're over 100 pips, right? This is over 100 pips. This is 128 pips. So this is my overall target. But now if we get something like this, right? Say London session, we just do this, right? We do this, and then we come down, okay? We've built liquidity. We've got money sitting right up here. So this is my target one, right? I come up here and potentially take some partials here, see how price action reacts. And then this is going to be my overall take profit, right? So whether I take it to like this for a 6-1, or I take it all the way up here for an 8-1, that's going to be the bias, right? That's what I'm looking at. So it all depends on what price does from now until it comes towards entry. All right. But this is overall what I'm looking on GJ. I mean, we've just been building really nice structure on it. I am, again, inclined to let this ride up. Also, the pound is extremely strong. I'm selling EJ. I'm looking for another entry on EJ. So, I'll definitely I'll give you guys an eye on that. But I'm favoring the pound pairs. They're looking. If you look at GU is just obviously I don't know where it's going, but it's going off world or something like that. I mean, it's ridiculous. So, but I'm looking at this again. This 4-hour candle gives me that point of interest. Now, the only thing that would invalidate this right off the bat is if we take these highs, right? If my target gets taken, I'm going to reevaluate it, but I would like to see us take this and then kind of trade into some of this inefficiency here and obviously make a new high, right? Because this is our previous structure high, our next high. I would like to see if we're going to make a new high off of that. All right. Steady called. Oh, they did? Awesome. Well, shoot. When did they call that? Wait a minute. Did they not fix the hold on. Steady alerts. Oh, on Monday. When the heck did they call it on Monday? All right, hold on. Let's take a look. Is it the same parameters? Dude, I haven't gotten anything. Oh, okay. On Dollaries Go Live. Yeah, man. Listen, yeah, I love John Dollery, man, but I just can't get up at 5 a.m. on a Monday, man. And I always forget to rewatch them. Did he post it in here? Man, why can't I? Did he not post it in Steady? No, that's EU and AU. All right. No. Okay. All right. No worries. Okay. So yeah. So there you go. If Dollar is calling it the same thing, man, that's awesome. That gives me more confidence. Okay. So everyone kind of have an understanding on that, right? We understand GJ. I mean, it's pretty. Did I even send? I think I sent GJ out last night too. All right. There we go. Okay, perfect. All righty, awesome. All right, so the next one that I'm looking at, right, is NU. Okay, I'm looking at NU, and let me see, where is Victor on the call? Let's see. No, Victor is not. All right, so I was talking to Victor earlier about this, and we're in agreement that NU and AU are going to come down, right? I personally like NU better. Let me just show you guys actually I'm in AU already. Hold on. So I'm buying AU. I'm in this stupid buy. Where was I in? I'm in a buy from like down here. Actually, yeah, I'm in a buy from down here. So I'm looking actually to take profit if we take these highs, right? I was actually looking to potentially buy it if we came down in here, but don't, I mean, we're a ways from that. And I don't think the news is going to knock it down, maybe we'll see. Um, but it's already taken the imbalance. Yeah. Let me delete this. All right. So let me go to NU because NU is my favorite, is my better setup that I like, right? So on NU, let's just look at it, right? So what happened? We had equal highs, right? Had an FU, bam. This candle right here grabs all the liquidity, right? You can go into a smaller time frame to get a tighter stop, but on a 1 hour candle, it's a 14 pip stop. So I'm willing to let it breathe and take the 14 pip stop. All right. Let me move that up here. Bam. Okay. Let me move this here. Perfect. All right. Oh, there we go. All right. So anyway, I'm looking at taking now. You can take it off the open. I personally, off the open would be, 19 pips. I'm personally looking at taking off the 50% because when you knock down into the 15-minute, you can see that 50% comes into the open of the 15-minute candle, right? This candle right here. So I'm going to stay at the 50% of the 1 hour. And again, stops are just above these highs. My original or my first target, right? If you go to the 4 hour time frame, you're going to see this huge displacement in this candle here, right? That's my target. Now I could go all the way to the bottom, but I'm going to go right to the nice round number of 0.66, right? It's an 87 pip move. I'm looking at about a 6-to-1 ROI. All right. Now, obviously, I've got some targets down here. I just don't know if the dollar's ready to really turn around yet, right? When the dollar's ready to go, absolutely, I've got these targets here that I'm looking at. This one in particular is going to be a big one for me. But I don't know if the dollar is going to make that run yet. So this is what I'm looking at for right now. I've got my alert set here. This is going to be obviously this is a counter trend, right? Because NU is bullish, right? NU is bullish. The whole basis of me going off of this is simply because we did grab this liquidity. There's no reason for them to have done this, right? Even though technically we haven't violated 1 hour structure yet, because this would be the most recent low, this area down here. But we have taken, if you go to the 15-minute, right, we have broken major 15-minute structure, right? All of this here. And we've also taken 30-minute structure, right? We've taken 30-minute structure. So, this is something I'm willing to take. I'm willing to put 1% on the line. If I get clapped, I get clapped. No big deal. They can have my stop loss. But I'm willing to take it just because it meets all my confirmations, right? So I'll throw that out there. Does anyone have any questions on this? I mean, it's pretty cut and dry. It's also I guarantee you on a 15-minute time frame, let's see. So on a 15-minute time frame, you can really consider this a distribution schematic, right? This is ultimately phase A, and here, this is your, you can consider this your test in phase B. We get our UTAD, right? This was our final up thrust. This area here was our up thrust. This is our UTAD. And then I just want that, that test of it, and then we drop. All right. So we are in a distribution schematic on it. It does line up with my confirmations. So, I'm personally, news comes out at 9:30. I'm going to watch it. If the news doesn't move this into my area, I potentially will just set my sell limit on it, right? If the news does move into it, I just want to see the news spike into it, see some signs of weakness, and then just enter the trade manually. All right. So that's how I'm going to play it. The other setup I'm looking at is oil, right? It is 30-minute. Okay. So on oil, right? Same thing, right? We had nice support, right? All these equal lows that got FU'd by this one candle, right? This one candle right here, 50%, you can obviously see candle comes down, grabs liquidity, and we take off, right? And we take off. Hold on. Oh boy. And we take off, right? So I'm going to go 50% of this 30-minute candle. I do have another entry off the 5-minute, but I'm just going to go 30-minute candle, 50%. All right. And what are my targets? My targets are the liquidity sitting right up here. Okay. I am bullish on oil, right? You know, even though if you look at all the last oil reserves, you know, we've seen supply decrease and our demand is going up. All right. So I do see that we're going to be trading, you know, around like the 42.50, $43 range. So this is the setup I'm looking at. I'll delete that so you guys don't get confused by it. But essentially, that's what I'm looking at, right? It's a 30 pip stop just below this low. Entry 50% of that 30-minute candle. And then I just want to take it up, right? I want to take it right up. This is a nice little 7.5 to 1. You know, especially with oil reserves coming out tomorrow, this may be a nice, you know, equities open trade, you know, that 9:30, 10 o'clock candle that comes in, drops down, and then we go up. All right. So that's what I'm looking for oil. This is just for me. I mean, if you trade FX choice, that's the lot that you'd be using, but you know, just watch it. Yeah, you got your order, Mike. Awesome. Yeah. I mean, this is a no brainer for me. You know, I'd be taking this all day on oil. You know, I haven't traded oil much, but that one is golden for me. All right. Let's take a look at. Let's take a look. I talked about EU pissed me off. You know, I wanted it down here. So I am, and I was looking for it this morning off of this 30-minute candle to take it up. But at this point, I'm not. I don't want to do that, right? Because there's a couple ways to do this, right? We can either take it up or we can take it down. And it's off the 4-hour, right? Yeah. So I'm looking at this 4-hour candle. You know, if we mitigate up, this may be a sell. So for right now, I'm not touching EU. You know, it just doesn't. It's kind of trapped in no man's land, and I don't want to. You know, obviously we have a lot of downward momentum to mitigate out of some stuff. So this may just sell off, right? So I'm personally not looking at an EU buy or a sell at this point. You know, I'd like for it to, you know, honestly, I would love for it to build a distribution schematic, right? We sit here, right? Let's come up. We come down here, signs of weakness, right? Kind of do something like this. We have some highs. Let's pop up above the highs, right? Break down, you know, mitigate that test, and then we come down, and then I'm game, right? But for right now, you know, I'm not, you know, this morning I was 100% convinced that this would have been a nice buy, right? Little 15 pip stop, just take it up to the highs. But because we've literally sat here, I mean, ultimately since midnight, right? We've sat in a 38 pip range for 22 hours, tells me that there's something going on. So I really don't want to play it. Euro GBP. So Euro GBP, I got in off of this 5-minute candle up here. Was it yesterday? Yeah, I got in off this 5-minute candle right in here when we broke structure, right? You could see came down, broke structure, just mitigated out of this. It was a 6 pip stop loss, you know, so for me, it was worth taking. And just taking it down, you know, right now I took 50% of this order off already. And I took it off when we came into this candle right here. So it was like, yeah, right in there. You know, so I took, you know, it was a 10.5. So I took 5% profit. I'm letting the rest ride. You know, I'm looking at taking it down to this 4-hour candle, right? Let's move this up here. Right. I'm looking at taking it to this 4-hour candle because I'd like to see what happens on this 4-hour, right? That 4 hours is going to, this is what's holding up price. If this gets taken, if this 4 hour candle gets taken, then believe you me, I am taking this puppy down to here. And we may even get down to this where I've been looking to take it. Okay. So for right now, I'm looking to add another order, and the play's pretty simple. It's we had some pretty all day. We had some pretty nice price action, right? Nice even trading. But here's the area of focus I'm looking at. My stop. Now it's up to you what you want to do, right? Let's, you know what? Let me look, because I haven't really decided yet what I want to do. Let's get into this candle, right? So this is the last up candle, right? Mitigated imbalance. I guarantee you this was 50% of that candle. Yeah, 50% of that candle, right? All right, so we have a clean mitigation, but now the question is, what is going on in here, right? What is going on in here? Because your stop loss might have to come up to this. So let's just see. All right, so we see this 25-minute candle, right? This 25-minute candle right here. 50%, boom, of that candle. So that 25-minute candle has been mitigated out of. So we're good so far. So this 15-minute candle may pose some issues. That 10-minute as well, right? Let's see what the 5-minute. All right, so it's entirely up to you guys how you want to trade this. I'll tell you right now, the stop loss is going to have to be the top of that wick, right? Yeah, because even on the 15, right? Do you see this 15 was perfect? This was a perfect mitigation. This 15-minute candle right here got mitigated out, but because there is some imbalance in this, we're gonna have to use a 20 pip stop. Okay, so it's entirely up to you how you want to trade this, right? And this is one thing that I tell people, right? Sure, you can go up here and trade it off that 5 or that 10-minute, but what if it only comes to this 1 hour and then drops? So, it's going to be ultimately up to you how you want to attack this. I can tell you, so I'm already in a good position, so I'm just going to go off the 1 hour, because even at this is a nice 4-to-1. It's only 84 pips, right? I'll take this 4-to-1 all day long. So that's what I would be looking at. If you want to split it and take it off the 5-minute, you can. Yeah, absolutely, Mike. Yeah, Mike said it. The higher time frames, and they do, right? They take precedent. If you and that's why I always look. If you ever see, like on GJ, I took that 4 hour, because if I can get a 4 hour candle mitigation with a small stop loss, I'll take it all day long, because it's almost guaranteed that that's what they're going to react off of. So I would definitely look at that. If you want to play it off the 10-minute, or I think the 5-minute. Let's see. Yeah, I mean, I personally would just play it off the 1 hour. I would play it off the 1 hour and let it ride. I mean, it's still a 4-to-1, which is nice. And go from there. GU, I got nothing on. I'm actually still holding positions from here and here. And my targets on GU are this daily imbalance, which we're almost at. I'm actually taking it to 1.300 is where I'm taking it. This imbalance right in here. What'll be worth half a percent. The smaller time frame, I mean, it would. The like I said, I'm already in it. I'm in that EJ or EG. So I'm in a good position already on it. If you want to take it off that 10-minute or that 5-minute, I mean, just split your risk. If you're doing 2%, do 1% on each. The risk to reward is definitely worth it. But anyway, so on GU, like for me, there's just nothing right now. I mean, until we need a huge pullback for me to even get into another order on it. GU and EU are divergent, right? GU is making higher highs. EU is sideways, right? And actually EU has made a lower low, right? So you can see the divergence between EU and GU. So, right now, that's why I'm not big on trading either of these. I'm holding my position. I'm in good. I'm up over from this one here. It's over 300 pips. Well, 273 is what I'm at, and this one here is like 186. Oh, this one's 200. All right, that's what it is. All right. So, I'm in pretty good. And this stop loss. I mean, you don't even want to know what this what this. It was a 34 pip stop, and I'm currently sitting at a 7-1, and this one here was, where was it? Let's see. It was off the 15 that I took it. Yeah, it was right here. Off this 15-minute candle. That was my stop 21. And we're up here. So this is at almost a 10-1, and this is at a 7.5-1. So, but I've been holding them since I've been holding them for almost 2 weeks. I'm just riding it out. GU wants to go up, I'm gonna let it go up. All right. Let's get into the indices, right? I talked about oil, gold. Listen, gold's just going up. I mean, I don't buy at all-time highs, so I'm just gonna let it play out. Yep. Have a good one, Mike. AN. So I was looking to buy. Here's another. You know what? Here's another reason why I'm more inclined for the NU. When this happened, I was looking at selling it from here. It never happened, right? But you can see Australia, New Zealand. The Australian is just so much stronger right now than the New Zealand. So I'm more inclined to take that New Zealand US dollar sell than the AU, simply because of this chart, right? Even though I don't like to trade this as much, because I mean, this is a lot of volatility, but normally this thing just goes sideways for days, right? So this is telling me to trade that NU one. Euro odd, I got nothing until it gets up there. Euro CAD is just being stupid. I got nothing on this one. Nothing on that one. You got GA. So yeah, we can talk about GA. GA right here. Bam. All right. So GA, if you go to the 4-hour, is a freaking beautiful accumulation schematic, right? Beautiful. I'm actually out of it. I bought here and just took it up to these highs right here. This was a nice, almost a 4.5-1. Yep, we're going to talk about US 30. That's the next one I'm going to get to. Let me pull this silliness up real quick. Hold on. Where is? All right. I sent it to Victor. There it is. Bam. All right. So this sucker right here. So here's what I drew a week and a half ago on July 16th, right? AU. For me to do this, I needed it to reject the resistance area, come down, sweep the liquidity, give us the spring. We'll take the test, and then my entry is off the test, last point of supply, and then we're golden, right? So that's what I was looking at for GA, right? And it was a fantastic Wyckoff accumulation, right? And it's done exactly that, man. Beautiful, right? Beautiful. I've definitely been tracking this along the way. Now for me, I need that pullback, right? I want to see that pullback now. Off the 4-hour time frame, I would definitely like to see us maybe potentially get into this. Oh, come on. Get into this right here. Okay. Actually, I drew this stupid arrow up perfectly. Look at that. With that, I mean, let's see what that stop loss would be. That would be, 60. So let's see what the 1-hour looks like. I don't want to take a 60 pip. Oh, okay, perfect. Here we go. All right. So I would be looking at potentially 2 entries, right? I would take an entry here, right? I would take an entry here. Entry number 1 would be here with a 22 pip stop loss, right? That's entry number 1. All right, have a good one, man. And then entry number 2 would be this area right down here, right? So if you get stopped out on the first one, you know it's going to come for the second. So you're better off just taking the small 1% loss and then catching it down here. But that's how I would play it, and then just take it up to the next to your next area. Whatever, even if it's up to here to these highs, depending on what price does here. But this would be an 11-to-1 ROI, and then this would be a 9-to-1 ROI. So that's my next play. I'm not interested in selling it, at all. I'm not interested in selling it. So for right now, GA, like I said, I've bought it up. Now I'm just waiting for it to come back down, and we can work on what we're going to see out of it. But ultimately, this is a perfect. I know where it's going. I know what we're going to do with it. We just got to be patient with it. All right, patience is key on this right now. So if you want, here I'll throw this in the chat, and you guys can, if you want to, throw a little Wyckoff of your own onto your chart, you can definitely look at it. All right, Camilla, have a good one. So that's GA. I mean, really, there's no setup from you now. I'm not interested in selling this because it doesn't need to come all the way down. This is just where I would like it for it to give me that reaction. All right. All right. So let's get into the indices, because everything else is, everything else I got nothing on. So, all right, let's do this. So first and foremost, right? Same thing. We have a accumulation, right, on US 30, right? Or at least the beginning stages of it. All right. You can let's go to the 1 hour, I think. Yeah. All right. So potentially an accumulation, right? I am bearish. I would like to see these lows taken, right? Um, we potentially could, and this is area I'm looking at right now, right? We could potentially look at this. Where the heck is it? There we go. We can look at this candle in here, right, as an area of focus that I would like to sell from, and then potentially run out all the liquidity down here. And at that point, just follow this along, right? We get our spring test, buy the test, right? We buy our test, price expands, we take out the highs, come back to our last point of supply, and then we go up and we target, right? We target these equal highs, right? That's what I'm looking at for U30. All right. Now, we're not in, I mean, potentially we're in accumulation, right? Potentially. But until we get out of phase B, right? Until I see the signs in the evidence that we're out of phase B and moving into a spring, until this spring happens, this is not accumulation, right? So that's what I'm going to be waiting on, right? This is what I'm going to be waiting on. Now, in the meantime, right? In the meantime, this is what I'm looking at, right? So just what I marked up, right? We have this 1 hour candle sitting right up here. I would like to see if we can retrace, right? If we can retrace. There's two areas I'm going to be looking at, right? Obviously, when I marked this up this morning, we didn't have this candle here. So I want to see what's in this candle here, right? All right, later, ma'am. I want to see what's in this candle here. That 30-minute might work. All right, so all of this has been evenly traded. It's this part that we got to really look at. Let's see what the 1 minute's going to give us. All right, so man, I might just take it off with that. There's the 2 minute. What that 30-minute look like? So if we took it off the 30-minute, what are we looking at points-wise? We're looking, it's 48 points, man. I don't know if I want to take a 48-point stop loss on it. I don't know if it'll, let's see what, if it's a 3-to-1, I'll take it, but. All right, we'll see where our risk has to be. All right, so if it's that, we'll take it. All right, so what I want to look at is I want to see what needs to get mitigated out of, right? So let's just go to a 5-minute, right? All right, last up, mitigates out. Let's see. All right, so that's done. Let's go to the 3-minute. Let's see. Do we mitigate out of this? Man, that's close. Where the heck is it? There we go. So, I mean, we can argue that these candles right here mitigated out of that 3-minute. Definitely mitigated out of the 2-minute. You know, the 1-minute here came down, open. I mean, so we're talking about 11 points. So I would be, me personally, if I'm going to take this, my stop loss, I'll just make it even 26,560. My stop loss is going to be right there. You know, I don't need to worry about, because everything up in here has been mitigated out of by this move here, right? I mean, ultimately, that's what this move accomplished. This move, right? We had some liquidity being built, right? Here, this came up, captured it, mitigated out, and then we dove down. So with that in mind, I'd be looking at that 30-minute stop loss right here, right? So that would be where I would be looking to play it first, right? And then if this gets stopped out, then we know we're coming into this 1-hour candle right up in here. All right. So that's ultimately what I'm looking at. These lows are going to get taken. These clean lows are going to get taken, without a doubt. You know, so I'd be looking at that for U30. And like I said, if that gets taken out, I'd be coming off of here. Stops just above that one. I'll tell you right now, I'd want them to take me out of this. I'd want them to hit my stop loss so I can get this one here. And that's what I'd be looking at. I made some pretty good percentage today between S&P and U30. So those are the two. That's what I'm looking at. Do we have some further targets that we can get down into? Absolutely. You know, we have some imbalance. Let me go to the 1 hour. We have some imbalance, right? Like in this area here, that I'd like to see. And obviously there's something in here, right? There's something in here that needs to get mitigated out of, right? Because we had equal lows and then this took the lows. So there's something in here that needs to get mitigated out of. And potentially we have some imbalance on the daily time frame around 25,000, you know, and then I still have my order pending from this 30-minute candle down here at 25,470. So that's ultimately what I'm looking at. I'm not looking at buying it yet. I do still see some good selling opportunities. Yesterday I sent out this 4-hour candle. If anyone took it, you know, awesome. You know, I took it off this 4-hour 50%. You know, it was a really nice entry. Stops were, you know, like I said, if you could take a 4-hour candle that gives you a 37-point stop loss on U30, you know, it's awesome. You know, if you held it all the way down, it was 8.5. I personally didn't. I just took it. I think there was a candle in here that I took it to, but I took 5.5% on it. You know, but that was a really nice clean mitigation off of that. Does anyone have any questions on U30 before we go to S&P? Do we understand what we're looking at? You know, it's pretty obvious. You know, we have some nice equal lows here that the market is going to have to take the liquidity out of, whether it's to go higher or to just run through and start tagging some stuff down below. Nope, no questions, nothing. All right, cool. I guess I can clean all this up here because we don't need that 50%. All right. So S&P, right? S&P played out beautifully this afternoon for me. I took it off of this 1 hour candle right here, and my targets were simply down here, right? Because we had equal lows. So that 3 o'clock candle just plowed right through it. It was beautiful. This was almost a 4-to-1 that I took. And let's see what we got, right? So on this bad boy, I'd be looking kind of the same thing. Let's see what the 2 hour looks like. Nope. All right, so what do we have? We have all right. Well, so structure-wise, everyone should see that. Yeah, structure-wise, everyone should see these equal lows, right? These nice equal lows that are still intact. So, I mean, technically, we still are bullish because we haven't broken a significant structure, right? We haven't broken, even though we kind of took this right here, but I would be waiting to break below here, which we still haven't done. 1 hour is different. Now, 1 hour, we have taken some structure. So on the H1, we are bearish. I would like to see if we can get into something up here. U30 is extremely clean. This just isn't giving us a really clean setup, not yet. And the reason, what I'm looking for is, so, this just kind of fell off, right? We really don't have any liquidity grab. I mean, we can kind of argue that this area and this area, this popped up to grab the liquidity and then take off. But I personally like US 30 set up better. Where is this going? We're taking these lows and we're taking 3,200, right? 3,200 will get taken by S&P. So if you can work an entry, that's where I'd be looking to go. I do have this H1 up here, but that just doesn't make any sense, right? Because if we come all the way back up here to this H1, then that's ultimately going to nullify this setup for U30, right? Because we would have to come up into like this 15 or this 5 minute up here. And I don't think, I personally don't want us to go that high, right? I want us to keep this range intact. And instead of breaking above the range, I want to go lower, because it would just follow with structure. So I don't want this up here to happen yet. This potentially could be an area of focus at a later time, but not right now. And then NASDAQ, man, I haven't traded NASDAQ in a while, but so I know NASDAQ broke 4 hour structure. Yeah, look at that. We broke 4 hour structure. So, which is crazy because NASDAQ's been the leader, So you can see we've broken a really significant 4 hour structure point. Does it mean that we're falling off the cliff? Absolutely not. I mean, we've got these equal highs up here that will get tagged. We got these equal highs up here that'll get tagged. It's just a matter of figuring out where it's going to go next. I personally, man, I really don't want to trade this either. I think U30 is the better setup. We have equal lows that are right here on this 1 hour, right? We got some equal lows sitting there. Let's see. Later, man. Have a good one, bro. Yeah, for me, honestly, I really don't see anything. What was this? This was 5 o'clock. All right, so they rallied. New York rallied up. Um, yeah, I don't want to take a trade, a sell from here, right? Because if they're going to come into here, they're going to take these highs. If they take these highs, right, that means that they're going to come into here, which if they're here, they're just going to take all of this, right? And that wouldn't bode well for me. So I almost just want this to potentially maybe come up and mitigate out of something here and then drop. I just don't know. I don't know if there's anything in there of a point of interest for me to play off of, right? Let's go to the smaller time frame. Um, I mean, potentially here, right? On the 5 minute. Let's see. So on the 5 minute, right, we have some equal highs. We have equal highs here, right? So we obviously have some liquidity being built there, liquidity being built there. So the question is there anything in here to play off of? Let's go with 15-minute, 30-minute. That 30-minute might play out. This 30-minute candle right here might play. Let's look with the 1 hour now. All right, so let's see. Um, all right. Yeah. So for me, again, same thing with S&P. Like I think U30 is the better setup. It could mitigate up to here. I mean, it would be a great ROI. Um, but if we did that, then we're kind of building um, some structure that I don't want to see, right? I would like us to just drop, maybe take this low on the 1 hour. So if we break below here, right? This comes down and breaks below and then mitigates up, possibly, right? So if we take this low, if we come down here like this during London, and then find something in here to mitigate out of during New York session, and then take it lower, I would play that. Um, but I personally don't like. I don't want it to go up because if it's gonna go up, then we've respected this low, and I would, I don't want it to break this high, right? Because we've made some really nice structure on the 4 hour, right? We have our high, right? We have our low, and this is our lower high. So I don't want us to go any higher. I want us just to continue to drop. All right. If that makes sense. So for me, the indices up until equities open tomorrow morning, later, man, I would simply just be looking at U30. It's got the cleanest setup, right? It's pretty ideal of what it wants to go for. So, and the targets are pretty clean, right? As long as we stay in this range. If we break above here, then I'm not going to be too happy because it's meaning we're going to go up higher. So, um, all right. So does anybody have any questions? Anything you want me to recap on, to go over, to look at? Like I said, I was pretty quick tonight. Normally it goes a little longer, but
Hey, Mike,
yeah, go ahead.
can you do like the recap over US 30, what we were talking about earlier for that entry?
For which, the lower entry?
Uh, yeah.
Yeah, sure. So what I'm personally looking at is here. We'll go to replay mode. So we obviously have, we have a target, right? We have equal lows sitting right down in here. Okay. That's the agenda, right? That's where they need to go and grab this liquidity out of. The next point of interest for me is where do they need to mitigate out of, right? So you can see ultimately in this range, all of London into New York morning, we just kind of ranged, right? We ranged, and when you think about it, what do we accomplish in here, right? We just built liquidity, right? Sellers were in the market, sellers. So it was just tug of war. So finally, we have an institutional candle that popped up. So if we go down to the 5-minute, right? If we go down to this 5-minute, and you can see here, right? This entire, where the heck is it? Here we go. So this entire area right here, you can call it a zone, right? So what's happening here? We're saying resistance. We try again, resistance, bam, right? So finally, what happens? We pop up and we break through this area, this resistance or this zone, all right? So what a lot of traders will be doing, retail traders, they're thinking one of two things, right? They're thinking, all right, so we're selling here, we're selling here, we're selling here, we're selling here, right? Well, if it comes back up, what are we doing? We're selling again because we're thinking it's going to go down, right? What ultimately ends up happening is where are we putting our stop losses, right? Our stop losses are above this high, right? Right in here. So when this happens, all the sellers just got taken out of the market. All right. Now, anyone that was looking to trade this, right? Anyone that was looking to trade it, and I think Gold Cup called a buy on S&P at the same area, right? Because what happened on if you go to the 15-minute time frame, right? We have a 15-minute candle that closes above all this, right? All of this here, right? This is our breakout candle. So anybody that had a buy stop, right? Typically, all the buy stops would be above the previous high. So any buy stops just got triggered. So this candle right here triggered buy stops. So what ultimately happened? Those buy stops got annihilated, right? So we've taken out people off buy stops, and we're also going to take people that thought this was a break and a retest and going up. We just took the market just took everyone out of that. All right. So now when we dig into this area here, right in here, and see, all right, what exactly happened in here? We could come to this 5-minute candle. Right, we come to the 5-minute. Let's go. Okay, so when we come to this 5-minute candle, all right, this entire, I think maybe the 15 would be better. Let me find the actual candle that did the true FU. All right, let's start at the 30-minute. 30, 25. Man, look at that. All right. 10. All right, perfect. There it is right there. So this 6-minute candle is what actually did the FU, right? That took all the liquidity, right? That enticed everything to happen. And then we get the immediate engulfing candle, right? This is the sign of closing out to sell it down, right? Now what they need to do is they need to mitigate out of this position. So if we come here and we measure 50%, right? You can see that this wick right here closed out of this buy order at 50%. So the market's fractal. So on every time frame, we're going to get something like that, right? On the 3-minute, right, you can see that this 3-minute candle ultimately was closed out by this area right here. On the 2-minute side, right, same thing. This 2-minute candle was closed out ultimately either by this or by here, all right? And then same thing on the 1-minute, right? Now the 1-minute, it's kind of subjective on whether or not this was actually anything closed out of. But when we get into, let's see, what is 30-minute? Let's go 25, 15. So we know that this area has been closed out of. So the next area that we have to look at is what happens in here, right? What happens in here? And ultimately, all of this here was mitigated out, right? This last push up, which mitigated out of here. Then you have this wick that trades into the candle body of here, right? Not all the time, all, everything I've been taught, the open is really where they can hedge out of that position, right? Now there is this 2-minute candle that is still open, right? So when you get down into the smaller time frame, this 2-minute candle is still open potentially, right? And there's no way to actually know what time frame candle that institution opened and closed their hedges out of, right? Without actually knowing the trader that did it. So that's where the probabilities come in. Do I trade off of it? Do I not trade off of it? But as far as my risk, my risk would have to be above this candle, because for my purposes, this area has been mitigated out of. This is what's still open. So I would need to play the, let me see what the 1 minute looks like. Yeah, I would need to play above this area right here. That'd be my risk. And I just went to a nice round number of 26,560. I gave it 3 extra points. All right. So that's how I'm looking to play the lower time frame. And yeah, that's how I'm looking to play the lower time frame right off of that 30-minute candle. And that 30-minute candle is, I think I deleted it, but it's right here. Right there. Okay. Now, if that stops me out, then I'm going up here. I'm playing off this 1 hour, and I'm not even guessing, taking second guesses on it. Yep. Sounds good, man. Have a good one. I'm going to play off this 1 hour candle, and my stop is just above this high, right? That's, I don't need to risk anything higher than that. And it'll look again, something like this, right? Just above that candle wick is 31 points, give or take. And then my targets, the immediate targets, are going to be right back to equal lows, right? Because ultimately, this is where the market is going to have to grab this liquidity. Structure-wise, we are looking bearish, so we're going to go lower. Can it go lower than this? Absolutely. I just, I'm going to be happy with this 7-1, right here. So that's what I'm looking at. Does that kind of answer everything you were looking at on U30?
Yeah, you explained it really well.
Okay.
I'm still learning everything. I'm pretty new, but I really appreciate it.
Have you gone through the trade house course?
The general, yeah, but I still need to do more like technical analysis and stuff like that.
Okay. Yeah. So you did the How Do I Trade course?
Yeah.
Okay, perfect. All right, awesome. That works. I know they're coming out with a new one. It should be out pretty soon. So just I guess just stay plugged in and just keep the one thing I could tell you is just make sure that you're journaling. When you see a chart like this, throw it on yours, save it, throw it into a document, and just kind of refer to it. That's one thing that really got me good at charting and understanding how the market was moving is by seeing it over and over and over, and now, I can honestly just pull up a chart and kind of give a quick 5-minute overview on it and know exactly what my play would be on it if I'm willing to take a risk on it. So, but yeah, awesome. Anyone else have anything else they want to look at, go over? If not, like I said, my back is killing me, so I'm going to go lay down and take a rest. Keep an eye. 9:30, we have that odd news coming out, so I'm going to be looking at it. Again, my play is look at that. Look at that, man. They're already playing games. I would be looking at NU over AU. NU is going to react off the Australian news. If you haven't looked at it, just back test any Australian news and you'll see how NU reacts. So awesome. You guys have a good one. I will see you guys later. I'm going to post this tonight. So if you guys want to watch the recording, you guys can. All right. Thanks. Have a good one.